We do everything we can to take care of all of our clients, but particularly love working with veterans. So I closed on a VA loan this morning with not a whole lot of a buy down for a 30-year fixed rate at 6.25.
Hello, everybody. Welcome to Mortgage Minute. Now, whether you're new to the show or have been with us the whole time, you should know that this is not a show about interest rates. Except today, we do have some really great information about interest rates that we do want to share. We may jump into that right away. But typically, our focus is, and still is, our focus is to help potential home buyers understand the mortgage world as it pertains to buying a home. And therefore, we focus on data over drama, facts over feelings, if you will. And our goal is to provide education about the home buying process, both from a real estate and mortgage perspective. And obviously, we want to provide you with truth about what's going on in our markets. So who are we to offer such advice? Well, my name is Matt Thomas. I'm a local realtor, have been for in my 15th year now. My co-host is Brian Dewald, highly acclaimed local lender in his 20th year. And both of us are serving the Denver metro and surrounding areas. So Brian, let's start with the absolute prevailing news of the day, which is the interest rates have fallen pretty dramatically for quite a while now. Tell us
Yeah.
about that.
Yeah, so finally we are in good shape. If you've been watching the show for a while, you know that I have no shame in picking on the Fed. They have sort of missed the mark for whatever reason we want to dream about, but finally they're starting to come around a little bit. We as an industry had a pretty good feeling that the Fed wasn't going to do anything yesterday, but it was the remarks that Powell, he's the Fed chairman, right? Jerome Powell. It's the remarks he made during the conference that really got us as an industry pretty excited. So, kind of going back a little bit and we've talked about this quite a bit. The Federal Reserve doesn't have any direct impact on mortgage rates. In other words, if the Fed doesn't raise rates, that doesn't mean we don't raise rates or drop rates or stay the same. But a lot of times it's this commentary that goes into this that really can have a positive or a negative spin in terms of mortgage prices.
Yeah, it's that reaction. And you hear terms
Yep.
like dovish or hawkish, and that's
Yep.
usually an interpretation of what they said and how he said it. So isn't that a fascinating thing?
Yep.
That what he says and the way he says it moves the markets.
Correct, Mundo. Yeah. So, going back, and I think we talked about this in our last mortgage minute here, we saw some good data highlights that were really favorable news for the mortgage world, right? We call them bonds, mortgage-backed securities, all of that sort of goes into the same, breath, if you will. So what happened yesterday, and this is pretty interesting. So, by the way, if we're talking about mortgage rates lately, guys, let's update this conversation almost daily, sometimes even hourly, right? Like if we're out looking at houses, know that whatever we talked about yesterday is probably different today.
Good
And
point.
I can,
Really good point.
yeah, I can show you some minute things, but like Monday this week, for example, today's December 14th, 2023. Monday, for instance, we lost a little and then gained a little and then lost a little and then gained a little. So literally 4 different rates in the same day. Yesterday was a pretty big news day, of course, with the Fed saying that they're not only not going to raise rates, they didn't lower them either, but the comments towards the end of the conversation from Jerome Powell were saying, we expect to see rates start to fall, the Fed funds rate. And this is the good news that really sparked some interest for the mortgage world and mortgage-backed securities and bonds, was that they're not going to wait until their target rate is hit, that 2% mark, right, to start tailoring down a little bit. He also didn't commit and say, once we hit this number, it's going to go. But a lot of the industry experts that I'm hearing from and have talked to today have said that, once we hit that kind of 3% mark, right now, by the way, it's at 3.5, which is again coming down, that we may start to see some cuts from a rate perspective. So anyway, getting back to my point about rates changing throughout the day a little bit. When the market opened up yesterday, we were off 11 basis points. In other words, the cost was 11 basis points higher than where it closed on Tuesday. By the time the Fed was over, and Matt, you and I were actually texting about this.
Yeah.
The market had improved 65 basis points. That's over 0.5% in terms of cost, right? Not rate, but in cost. So anyway, super good news yesterday. I wanted to show you a chart, and I may show you a couple of them. But if I
Great.
go,
We do have people who listen and pay attention who actually like a candlestick graph.
yeah,
They may be few and far between, but they're also the same guys who make our our world work, our technology work, and everything else. So for those of you who out there who love these candlestick graphs, here you go.
Yeah, here we go. So this is a 6 month window here, going back from June of this year to current. Right, today's December 14th. This is not the mortgage price. I can look at that momentarily, and if anybody wants to get into a deeper dive of this, certainly call me and we can schedule a time to do that. But the important thing to know here is this is the 10-year Treasury note, right? So right here, it's at 3.92. That's today on the far right of our screen here. The 10-year Treasury note hasn't been that low since back like in June or July. So, and the reason that becomes pertinent is that, mortgage prices traditionally, this is a really great benchmark to show what mortgage prices are doing. So, 10-year Treasury note here, again, good news, it's under 4%. I'm going to flip this now and go back to, this is an actual mortgage-backed security. So it looks completely backwards, right? So green is good. Here's some big green day. That was a PCI and some employment data. Same thing here. Here's yesterday. So another
that was right back when mortgage rates really started to fall at the beginning of November.
Yeah. So this is October 26th or so, 27th, somewhere in there.
So really, we're on about a 6-week run of
Yep.
pretty positive gains.
Yeah. And rates are anywhere, a point and a quarter lower than they were, just over a month ago. So we've had a really
and thank goodness.
swing.
I mean, obviously, perspective says, that was the highest that we've ever seen back in October, at least in the past 20 years, I should say. But obviously, with our affordability issues in the market today, where with home prices being what it is, that high point in the last 20 years has really been a pretty devastating mark. So to come off of that is it's great to see those big gains that we've made since then. That's for sure.
Yeah, and we don't like it to go too heavy too fast, right? Just like we didn't like it when the Fed raised as quickly as they did, but
they raised so fast, we don't want to see them probably just drop it through the floor either.
Exactly. Yeah. To kind of add on to that piece a little bit, we're still seeing some pretty cool things come together. Sellers are still paying for a little bit in concessions. We're doing a lot of, 1.0 buy downs where we can get rates dramatically lower than we've expected for the last while, at least for the first year. Some of these programs allow us to do a free appraisal. Like there's so many cool things happening right now that even just a little break in interest can really make a huge difference for folks, obviously. So,
and Brian, to that end, do you see some of those incentives and things drying up potentially or evaporating? Because obviously as the market shifts and changes, there's probably less need for the incentives to be out there offered by, whatever investors might be backing a certain loan. Certainly, you'll start to see that in the real estate world where a seller perhaps, 1 month just had to, give away the farm, and then the next month has to, has people knocking down the door. So,
right. Yeah, it's so funny. Yes is the short answer. I do see some of that going away. But for the time being, I say we jump on the bandwagon. If anybody's been kicking it around for the last year and waiting for rates, this might be a good opportunity to get back in.
Well, and if you consider mortgage rates, as you just talked about, in one day can change 4 different times, and they can go up and then go down and go up and go down, just like a lead in basketball, a basketball game or something like that. But when you have people reacting to that, people don't necessarily move that quickly. They literally are considering a physical move, buying or selling a home and a property, and all that goes into that. And so we have these moments of time where the mortgage market is moving really quickly, and you have to make some quick decisions. But overall, buying or selling real estate, you're not typically moving all that quickly. And so it's tough when the market sometimes, we're thinking about something, we're chewing on something. They say that we're sitting on a fence. That term is used a lot when it comes to, should I buy, should I sell, should I buy now, should I wait, should I refinance now or later, all that stuff. All those are decisions that are not typically made in an instant. However, the market changes hourly, daily, certainly weekly and monthly. So it's important that when we put these things out there, that if you're in a position that you do really take these things into consideration, because next week, next month, next year could be a totally different story, and we just don't know.
Yep.
And I suppose that's why we're trying to do our best at reading the tea leaves and the candlestick graphs, if you will, to find out what we think is going to happen. And that's where all the interpretation and all the people who pretend to purport to know what's going on exactly. We report to you, as we've always said, we report to you what we see going on immediately, what buyers and sellers are going through currently. Like I said, we may see some changes in the future. It's not going to be a linear trend towards 5%. It's just not going to be that way. It wasn't that many months ago that we were concerned, how long it would be before we'd see rates like that again. Right. And we were also agonizing over rates that were 6.5, and now we think that they're great.
Well, it's just nice to see the difference in spread, and to kind of add to that a little bit, right? There's a lot of veterans that don't know how aggressive that market is, but they literally got their earnest money back, right? They put down $5,000 in earnest money. The seller paid everything else, including the little buy down to get there. So they put down $5,000 in earnest money and walked out with a check of $5,000 today. Pretty cool the way that works.
Fantastic. Well, that's how the VA works, and that's how we like to see it. That's one of the things about this time of year. There are opportunities where in a more frenzied market, we're not seeing those opportunities, even for vets, as much as you want to, you hope that the VA program can really give an advantage to a veteran buyer. Sometimes that's not a desirable loan to see. And so when you have the market a little suppressed and a little quiet, there aren't as many people knocking down the door for a particular listing, and a vet might be able to slide in and grab a property that they wouldn't otherwise be able to compete for.
Yeah, they got a killer house. I'm thrilled for them. They bought it from a couple that used this home as a vacation deal. They were in the house two weeks out of the year. It's a 2-year-old house, so they totally scored. It was a super.
Wow, fantastic. That's awesome.
Neat deal.
Great story. Thanks for sharing, Brian.
You bet. This is probably our last one of the year here, so just wanted to say happy holidays and Merry Christmas to you and your family, and to everybody that watches, our viewers. And it's been a really fun and interesting year, with all the data and everything else. And, glad to end the year here on a good note as far as rates and market info. So.
Yeah, there's no question about that. We always can look at what the future holds in terms of next meetings, when reports and information and data will be expected to come out. And that's, in between, we sort of ride what's the market is giving us. But right now it's a great trend to be going into. I appreciate you taking your time, Brian, to do these with me, and providing your insight, and happy holidays to you and to anyone who else is watching. And great to end the year on some good news.
Heck yeah. Thanks so much for having me.
All right, buddy. Take care.
Yeah.